Welcome everybody to our next live stream. Go ahead and type 1 in the chat if you can hear me. We've got a very, very good show for you today. We've got a lot to cover. There is a lot happening right now. So we're going to go ahead and get into this. I just wanted to wait a few minutes for everyone to tune in. Sounds like you can hear me. So let's get this show on the road, everybody. Okay. First, what we're going to cover is what some of the big banks are warning about. We're going to cover what happened in the markets today, what's happening in the commodities market, and also what's happening in the auto sector, plus much, much more. So this is going to be a very, very action-packed live stream, and it's great to see you all chatting amongst yourselves in the live chat. I really love doing these lives so I can engage with you a lot better. And even, hey, maybe at the end, if there's something huge you guys want me to cover, maybe I'll cover it. If it is some big breaking news that may break while we're on the live stream, or something, a big story that I may have missed that you guys want me to cover. So, okay, what we need to talk about, there's a lot of volatility in the markets today. We can see the US sold off a bit. I'll go ahead and bring up my screen here. The NASDAQ was hit the most, down 1%, S&P 0.5%. Bond yields are still getting close to that 4.5%, which would be very, very troublesome for the stock market if yields go to 4.5% in the 10 yield, which I think is very, very possible. We can see crypto actually had a pretty good day today. Bitcoin, it did go above 26,000 briefly, but then it fell back below 26,000. But oil, I think Biden's handlers are going to be working overtime to change his diapers, ladies and gentlemen, after seeing what's happening in the oil market right now. He is going to be pooping himself because what's his big pitch, Bidenomics. Inflation's falling and the unemployment rate's at record low. Well, that's about to flip. And we can see pretty much gold and silver was flat today because the dollar is still performing pretty strongly. And like I talk about, when the dollar goes up in the short term, that is bearish for gold and silver. So, okay, we're going to get into this story first, which I'm sure maybe there's been some other finance YouTubers like Jay Bravo, Steve Van Meter, Economic Ninja. They may have covered it, but I'll give it a bit of a twist. But this is just one story I'm going to cover first. And then I've got so much more other stories that I don't think they have covered today. All right. So Jamie Dimon, that's right, Jamie Dimon, best friends to our old Epstein, says it's a huge mistake to think the economy would boom with so many risks out there. Now, while we have to take everything he says with a grain of salt, why he is, says one thing, does the other thing, he's right there that if you think the economy is booming or will boom, when there's so many risks, you need to think again. All right. So JP Morgan Chase CEO Jamie Dimon said Monday that while the US economy is doing well, which I don't think at all is doing well, it would be a huge mistake to believe it will last for years. Of course, it would be a big mistake to think that the economy will boom for years. It doesn't happen like that. We always have cycles. We have a boom, then we have a weaker period, and then we have a crash period. So topping his concerns include central banks reining in liquidity via liquidity programs via quantitative tightening. Now, this is exactly what I talked about in my video that was posted about 3-4 hours ago. I talked about what's happening in the bond market with a lot of central banks selling. The US government is going to have to issue more debt. So there's going to be big problems for the bond market and interest rates. Also, the Ukraine war, which is still very risky. We see Kim Jong-un. He just had a meeting with Putin. Who knows what those two got up to, but things are escalating. Yeah, so Frank, you got no worries over the long term of gold, silver, platinum? Yeah, over the long term, even with stock market, over the long term, 10 years, you should be fine. But in the short term, there are some very, very big risks. So he also said, to say the consumer is strong today, meaning you're going to have a booming environment for years, is a huge mistake. Now, I don't know if you remember, but it was just last year, Jamie Dimon, or Jamie Dimon, whatever you want to say, was saying the consumer was strong, the balance sheets were so strong. Well, it seems like reality is now hit, and the lag effects are now starting to hit. We're starting to see the consequences of high interest rates, and the consumer's not strong at all. Okay, so there's some other things in this report which I thought were very, very interesting. So it's also talking about the credit cycle. This goes along with the economic cycle because this whole economy relies on debt. So even when you have a recession, which you're eventually going to have, you have a real normal credit cycle. Yeah, meaning credit's going to collapse, and that's what we're seeing right now, everyone. Credit standards are tightening, and also credit lending is collapsing. He also is a bit upset with more regulation for the banks. You know him, he's obviously going to be biased. He doesn't like more regulation for the banks. He would love it if, you know, they didn't have to have any reserve requirements at all, because then he could go ahead and take on as much risk as possible. And if something went bad for Chase Bank or JP Morgan, well, then they just go cry to the Federal Reserve and the US government for a bailout. So listen to this. He called the new regulatory mandates hugely disappointing and pushed for greater transparency from regulators, saying that JP Morgan would have to hold 30% more capital than European banks. Now, after we saw a bunch of bank failures earlier this year, don't you think it would be a good idea to increase these banks' capital reserves? So that way, if we do have another run in the banks, they actually have the capital there to pay depositors. I think that's actually a good thing. But no, these banks, they want to have as little capital reserves as possible, lend out as much as possible, and then go ahead and cry for a bailout if things go wrong. So he also said here, I think there are uncertainties out there ahead of us and still very large and very dangerous. Well, that's completely obvious, which I'll go over those risks in a moment. Among those risks is deteriorating relationships with China, which I think is a huge issue. We saw in the G20 summit, India is really starting to try to position themselves to take advantage of the deteriorating relationship with China. I think we're going to see the US and India work closer and closer together, but it will be interesting to see which side India ultimately goes to. Will they side with BRICS or will they side with the US? So this is going to be more issues for China. Prospects for JP Morgan operations in China went from looking bright to just only okay because of the rising risks, he said. So, okay, what he's warning about there, the economy's not doing as good as everybody's saying. The economy's deteriorating. The consumer is not strong like what they're saying, and that's what we already know. But I do have some other very, very important news to go over with you today. And what we're going to talk about is what's happening with oil. And this could cause big, big issues for the central banks, because a lot of central banks have pretty much declared victory on inflation, when we all know inflation is far from over. Prices are still surging. Prices are still going up. And what's just been announced by OPEC and Saudi Arabia with their supply squeeze is going to be more upward pressure on inflation. And what comes out tomorrow? The CPI report. And I think the next CPI report could definitely come in hot. So look at this, everyone. OPEC oil data show 3 million barrel shortfall on Saudi supply squeeze. So thank you for the super chat, guys, Frank and Lowrider. India will side with BRICS. Yeah, we'll definitely have to wait and see. It's pretty much 50-50 right now. So listen to this. Fourth quarter deficit may be the biggest in more than a decade. So again, while they're all declaring victory on inflation, if the price of oil and fuel goes up, which is the fuel for the economy, everything else is going to go up as well. And it could cause central banks to have to lift interest rates again, which will have devastating consequences because the consumer is already in big, big trouble. So Saudis, Russia have extended extra supply curbs to the end of 2023. So I'll go ahead and bring up the charts here and we'll dive deeper in this report. So world oil inventories having depleted sharply this quarter are set for an even steeper drop of roughly 3.3 million barrels a day in the next 3 months. Also, if realized, it could be the biggest inventory drawdown since at least 2007. I'm seeing a lot of comparisons to 2007 and 2008 with the data that's coming out now, everyone. And I think nothing really good happened after 2007. I'll go ahead and show you this chart here. We can see the oil supply squeeze. OPEC data indicates a growing supply shortfall. Okay, so again, this is a very, very big risk. So get ready, preppers. Husker says, yeah, you definitely want to. So the kingdom's hawkish strategy is aided by export reductions from fellow OPEC members. Russia threatens to bring renewed inflationary pressures to a fragile global economy. That's exactly right. So diesel prices have surged in Europe, while American airlines are warning passengers to brace for increased costs. So if any of your airlines are doing some specials maybe for next year, maybe you want to book them in now because prices may get more expensive. But hey, we're also going to be entering in a recession, so only go on that holiday if you can actually afford it. Definitely don't put on your credit cards and pay 20-25% interest, what some people are doing right now, which is absolutely crazy. So this is going to be a big political issue for President Joe Biden as he prepares for next year's re-election campaign. With national gasoline prices nearing the sensitive threshold of $4 a gallon, the White House has said the Saudi move doesn't complicate its economic efforts. That's exactly the right one. That's what we're talking about. The big push, Joe Biden's been saying right now is Bidenomics, record low unemployment, the economy is growing, and inflation is coming down. Well, I think it's going to be very, very bad. And I think it's very possible that we could see inflation surge again coming into the 2024 election. And we could also see the unemployment rate tick up. So I think Bidenomics is going to fail and fail big. But another story we have to pay attention to. So Fed meeting comes during historically tough week for US stocks. So we're going to get the CPI report tomorrow. And then the Fed meeting on the 20th, I believe. So mark your calendars because this could lead to a bumpy ride. So listen to this. In 26 of the last 33 years, the S&P 500 index fell the week following September options expiration with a median drop of 1% that analysts showed. So this time around this week encompasses the Federal Reserve's monetary policy meeting set to conclude on September 20th. And investors expect the central bank to hold rates steady at the meeting, but are looking for clues on whether policymakers plan to deliver another increase later this year. So this is all going to depend on the inflation report, or the CPI report that comes out tomorrow. And might even live stream that. We'll see how we go. And if that comes in hot, which I think there's a chance it will, and imagine if we see a surprise interest rate hike at this meeting, it's definitely going to cause a lot of volatility in the markets. So I'll go ahead and move myself here so you can see the chart. So the September effect, we can see here, again, in the last 26 of the last 33 years, the S&P fell during this week. But not only that, it's because a lot of mutual funds and tax-related selling by households, so they tax loss harvest, or maybe their taxes are due, and they go ahead and sell their stocks towards the end of the year. So additionally, stocks can come under pressure in September as individual investors may start to pay the estimated taxes. So, okay, that's what's happening with the banks. That's what's happening with oil, the risk with inflation. But there's another very, very important story. I want to cover what's happening in the auto sector, because the auto industry went absolutely crazy during COVID. Used car prices went absolutely insane, and these prices were unsustainable. It's because everyone got their stimulus checks. They were able to get credit very, very easily. They were able to buy, they were able to get interest rates very, very low. At the same time, there was no supply in the market. Well, now what we're seeing is auto dealers are hit with unprecedented collapses. So let's get into this next story. So another one failed. Subprime auto dealer hit with unprecedented changes to the auto retail landscape. Let that sink in, everyone. So what's happening with the auto landscape? Well, let's dive deeper into this report. Go ahead and bring myself back here. So a popular used car dealership in South Florida called Off Lease Only filed for Chapter 11 of the U.S. Bankruptcy Code in the District of Delaware last Thursday, citing unprecedented changes to the automotive retail landscape. So what are you guys seeing? Are you seeing used car prices come down? Definitely where I live. Again, this is dependent on what state, what area you're in, how that state economy is doing compared to other states. I'm definitely seeing a lot of for sale signs on the side of the road, a lot of cars parked on the side of the main roads where they're trying to sell their car because their mortgage rates have gone up, because the cost of living's gone up, maybe. they got a bit too optimistic during COVID. They went and bought that brand new car. And now, reality is hit and they can no longer afford the repayment. So they're having to sell at discounted prices. Okay. So listen to this. The industry has been impacted by inventory scarcity and vehicle price inflation stemming from supply chain disruptions and multi-year declines in new vehicle production. And you can see with this chart here, everyone, which I'll bring up some more charts in a moment. The company also blamed elevated used car prices and soaring interest rates that further deteriorated conditions in the automotive retail market, weakening consumer demand and affordability. So that's exactly right. Prices have gone absolutely insane. At the same time, interest rates have gone insane. So off the lease only demise was due to collapsing demand after used car interest rates skyrocketed while used car prices remain elevated, sparking an affordability crisis. Hey, Jay Bravo's in the house. Thanks for that $10, man. Maybe I'll go ahead and buy myself some more water or something after this. So I'll go ahead and bring up some charts here. I'll move myself so we can see bankrate.com use auto rate national average. It is now around 8% and it is still climbing. Again, remember, even if the Federal Reserve does not lift interest rates, oh, sorry, I forgot. Cue the fire. That's right, cue the fire. How did I miss that one? But yeah, US auto national rate interest rate is now 8%, and I think it's going to go higher. Even if the Federal Reserve stopped lifting interest rates, if they keep selling bonds and the US government keeps on issuing more bonds, we're going to see interest rates keep going higher for auto loans, credit cards, mortgage rates, etc. And listen to this. This wasn't no small auto dealer. So the Florida-based company listed assets and liabilities each of between $100 million and $500 million on its bankruptcy filing. It noted a range of strategic options were being explored for an orderly wind down of the business. Thanks for that. Super chat, Yimi. Awesome. All right. So in April, another subprime auto dealer called US Auto Sales abruptly closed dozens of locations and filed for bankruptcy in August amid headwinds gathering in the used car market. So everyone, like I said, it's happening. Things are deteriorating. I still get a few haters saying nothing's happening. The economy is booming. No, people, things are very, very bad, but they can take years to play out. So maybe you can join me next time, Jay Bravo. All right. So I'll bring up some more charts here. So we can see this is a recipe for disaster. I'll go ahead and bring this up, move myself so you can see the chart. Also, thanks for that super chat, Renault. So US, yes, a lot of people selling their own vehicles, higher oil goes, higher shipping and manufacturing costs and so on. Thanks for all the work you do in research. Thanks for that super chat, Renault. Too little. Yeah, that's exactly right. And this is what's happening. So we can see here, the red line here, that's credit card revolving credit. Look at that. That is skyrocketing. Where the green line, we can see here, personal savings rate is plummeting. So can this go on for everyone? Can this go on forever? Can credit go up and savings go down forever? No, it cannot. And that's why we haven't seen a full-on collapse yet, because people have been taking on more and more credit and they've been using their savings, but eventually they won't be able to take on more credit and eventually their savings will be depleted. So it's going to be big, big issues. So also, this isn't the only auto used car dealer going under. So in April, another subprime auto dealership called US Auto Sales abruptly closed dozens of locations and filed for bankruptcy in August amid headwinds, like I said earlier. Love you too, Jay Bravo. Tim, thanks for the super chat. Thanks for your support, guys. You guys are awesome. So the fact is, what is the facts? That mid to low tier income earners can't afford a monthly $1,000 payment. I'm going to have to go Gordon, no, is it not Gordon Ramsay? Geez, that's cooking. Dave Ramsey. Too many Ramseys that are angry. What are you doing if you're a low to middle income earner with a $1,000 car payment? That is financial, I don't even know I can say that word. That is financial. I can't say that word. They'll probably get the live stream cancelled. That will financially ruin you, okay? Put in other words, you should not be paying $1,000 a month. Really, you should be paying cash, and you want to buy something at least 5 to 7 years old, because most of the depreciation will happen in the first 5 to 7 years, okay? Do not go ahead and buy a new car to keep up with the Joneses, because guess what? Every year, another new car will come out, and you have to keep on buying that new car to keep up with the Joneses, and there's always someone richer than you out there, okay? So just don't get into that debt trap. Also, this is happening at the same time that shelter and food remain elevated. I'm definitely noticing this. My grocery bill is skyrocketing, okay? I've got an app that tracks how much I spend on groceries, and it's pretty much doubled since the start of 2020, the pandemic. It is insane, the amount food prices are coming up. It's actually, because I've got a big family, okay? It's a big family. It's actually getting more expensive for food than my mortgage, because I have a pretty small mortgage. Further, many of these folks are financially tapped out, as we shared in the latest notes titled Sliding Consumer Credit Accelerates as XX Savings Exhausted, Average Credit Rate Hits 22%. I think that's going to get higher. So another chart here, this is the used car price index. I'll try to bring it a bit higher. Maybe it's a bit easier to read. So we can see here, they did peak around late 2021, early 2022. And they have been falling. Yes, we did see an uptick. Now it has hit a lower low. So we're definitely going to have to see if it can hold this line here, the yellow line. If it dropped below that, I think we're going to see more price declines. I think what we'll see is another double dip price drop. You may see volatility where you may see prices tick up again. But simply, if people keep on taking on more debt, if prices keep going up, they're going to be forced to sell their cars, okay? So that's most of the stories I wanted to cover today. Again, for those that missed, we went over what happened here with Jamie Dimon, pretty much saying that consumer is in big, big trouble. The economy is in big, big trouble. We went over oil skyrocketing, which is going to be more issues for the banks. We went over that CPI comes out tomorrow. That's going to be a big catalyst for the markets. And the auto sector is in big, big trouble. So there's definitely a lot of risk, everyone. And let me know if there's anything else you want me to cover in the chat. If there's something big, huge that I missed. I pretty much looked at all the articles today. I don't think there's anything else I missed. Is there anything else you want me to cover? Go ahead and read you guys' chat here. DXY. Let's check out the DXY. Let's see what's happening with the almighty dollar. Okay, I'm bringing this up here. So the US dollar index, okay? Now this has been climbing the past month, and this is why gold and silver has been selling off, because every time the dollar goes up, it is bearish in the short term for gold and silver. But once this trend reverses, once they start cutting interest rates next year and printing money again, we're going to see gold and silver absolutely skyrocket. Okay. So I'm just reading out the guy's chat here. How many we got watching the live right now? 1,000 viewers. All right, that's awesome. New cars to $100. I wish. Yep. Car dealers losing a lot. Yeah, definitely, because what they did is they also brought cars at very, very expensive prices, and they were very stubborn. They didn't want to sell those cars for a loss, so they tried to hold them and keep prices elevated. But now this is backfired on them, because prices have fallen further. So now they're stuck with these cars on their lots that they paid crazy prices for, and they don't want to sell it lower, because then all the other cars on their lot that have to sell lower as well. Alan Godman, the tiny housing boom. Yeah, I saw a video. I think it was Jeremiah Babe. He did a video on the housing, the tiny housing boom in Texas. And he said, "Is this the new American dream?" Yeah, I remember seeing that. Go ahead and bring this up here. I thought that was crazy. Yeah, I think they're definitely trying to Texas Tiny homes. I think they're definitely trying to get you used to, just staying in a tiny, tiny house and saying this is the American dream. Which, there's no problem living in a tiny house, but the problem is if you've got no choice but to live in a tiny house because the housing market is so unaffordable.
I'm gonna walk up here.
Let's see if I can bring the video. Yeah, this is the video he did on the tiny homes in the US. Let's go ahead and see if I can see some footage here. Look at that. Look at these homes. So again, some people may want to live in these homes because it's a lot more affordable. There's no problem with that. But the thing is, a lot of people are being forced into these homes because they have no other choice, okay? If you want to live in a smaller home because it's more sustainable for the environment, it's more affordable, no issue. But the issue is people are being forced into this, and these are going to become slums in the next 10 years. And also, too, when you look at the price per square meter, it's very, very expensive. It's not cheap. It's only because the house is so tiny. So is this the new American dream, everyone? It's absolutely crazy. Look how tiny these homes are. Again, if you want to save some money, live in that, so you don't have to have a 30-year mortgage, go ahead and do it. But it'll be good if you had the option to do it, not forced to do it because prices are so crazy. Any bets on CPI? I have a feeling it's going to come in hot. Okay, we'll see. We'll see what happens. Any chance we see double-digit gas prices this year in the States? I highly doubt it. But if I was a betting man, which state it would be? What state do you think has the most chance of seeing double-digit gas prices? Can anyone guess? Can anyone guess which state out of all of them would see double-digit gas prices? Yeah, that's right, California. If anyone was going to have double-digit gas prices, it'll be California. Yeah, Trump won. Yeah, it does look a bit dystopian. We're all seeing they want those 15-minute cities, and you're going to be in those tiny homes or in those tiny studio apartments, own nothing, and you'll be happy in the metaverse, getting your dopamine hits in the metaverse. Is there anything else you guys want me to cover? I'm actually having a lot of fun on the live stream today. I hope you guys are having fun. Apparently they got $7 gas already at the station with oil Derek's pumping. And I think Biden is also cancelling a lot of the leases on the oil and gas fields as well, which he's very happy about. It's going to make the cost of living even worse. I'll go ahead and have a look at the breaking news to see, while I'm doing this live stream, if anything big has come out. Oh, well, for my Australian viewers, we can see here, I'll go ahead and bring this up here. Qantas illegally fired 1,700 workers during the pandemic. It's going to be interesting to see what happens with that. A lot of people lost their jobs during the pandemic, and it looks like Qantas did something very, very wrong. We can see here Binance US CEO leads embattled crypto exchange. Okay, this is maybe potentially what could be a black swan event for crypto. Something we definitely have to watch out for. And this is what I've been warning about. And I first reported this months ago when Binance was exiting Australia. A lot of people saying, look, that's just, fear porn, nothing's happening. Well, things are definitely getting worse for Binance. And Binance being the biggest exchange, if they go under, in the short term, long term, I'm bullish on Bitcoin, especially for 2024 with a halving event. But over the short term, this could cause a huge drop in Bitcoin's price. And while you want to have some cash on the sidelines to take advantage of the situation. Cheap sats incoming, yes. What do I think about geopolitical factors like BRICS? Yeah, I think it's a huge factor right now. I think the situation between US and China, like I said, is getting worse. India try to kind of position themselves, I think, to take advantage of that, to try to get more manufacturing done and production done in India. But they're ultimately going to have to choose between BRICS and the G20. So be very, very interesting to see which side India goes, because I think that could ultimately lead to the fate of what's going to happen with the geopolitical landscape in the West and against Russia and China. Yeah, Binance attacked by SVB goons. Yeah, the Securities and Exchange Commission. They were all in SBS, Sam Bankman-Fried's pocket with their private meetings and the emails that came out. Bring on the gold standard BRICS. Yes. Yes, sir. Okay. Well, I think that's pretty much everything for today's live stream, everyone. Again, you can go ahead and watch this back anytime you want. It's been awesome chatting with you all. I'll definitely try to maybe do a live stream tonight. This is my time. That's morning US time when the CPI comes out. So thanks for watching. Please like the video, share it with your family, share it with your friends. You're awesome. I'll see you all in the next video.